Onto your markets news now. Asian markets ended the week in the red. This as investors came to the realization that the trade war between China and the US would likely have impacts on regional supply chains. A Reuters publication noted that with Trump proposing tariffs targeting sectors such as semiconductors, pharmaceuticals, steel and aluminium, this would likely affect a quarter of exports from countries like South Korea, Japan, Malaysia and others that could be affected, as this is an evolving story, with Trump announcing new measures every so often. The Nikkei share average fell by 2.17%. The Hang Seng index declined by 0.6%, while the Shanghai Composite Index lost 0.25%. US markets couldn't hold up the gains that they made in Wednesday's trade, declining in yesterday's session, with the Nasdaq under so much pressure that it's near correction territory. Today is set to be a nerve-wracking day for investors as they eye the latest US employment numbers and await a speech from Federal Reserve Chair Jerome Powell later on in the day. The Dow Jones Industrial Average declined by 0.99%. The S&P 500 declined by 1.8%, while the Nasdaq Composite Index fell by 2.61%. Looking at the local indicators, we see that the all-share index is down 0.2%. The rand is trading at 18.08 against the US dollar, 19.65 vis-a-vis the euro, and 23.38 against the British pound. Gold is trading at $2,919 an ounce, platinum at $972 an ounce, while Brent crude oil is trading at $70.47 a barrel. Well, for more on the markets, we're in conversation now with Bianca Botes. Thanks very much for joining us, Bianca. Volatility seems to be the name of the game on global equities, and today market players await the latest on US employment numbers and a speech to be given by the Fed Chair Jerome Powell. No doubt he'll be speaking on monetary policy direction. So these are elements that will no doubt be pushing markets going forward.
Good afternoon. Absolutely. When we start looking at the unemployment rate, for instance, markets are expecting that it stays stable at 4% for the time being. We also have non-farm payrolls coming out this afternoon. And there is an anticipation that might actually surprise a little bit to the downside, given the ADP numbers that we saw earlier in the week. When we take a look at the anticipated a speech by Jerome Powell, the chair of the Fed, then we can expect that he is going to toe the party line and stick to the messaging that we have seen consistently over the past couple of months, where he will take his guidance from the data, but also keep a very close eye on the health of the labor market and the health of the US economy.
So there's talk about corrections happening, particularly on US markets, which are widely believed to be overvalued in any event. Do you think that right now, with everything that's going on, this could be the catalyst to corrections in those markets?
As I mentioned earlier, we actually started seeing the Nasdaq entering correction territory. That is actually down 10% since its highs in December. I think what's important to take into account is that there are certain sectors and elements within the indices that are overvalued, but it doesn't mean that the index as a whole is overvalued. And we are seeing corrections in certain sectors. We are seeing a lot of volatility coming through in the equity market. And this is mostly driven by trade uncertainty on the back of Donald Trump's policies, a decline in consumer sentiment, a decline in manufacturing production, and then obviously also some fears around economic stagflation and economic growth coming under quite significant pressure. What we will keep an eye on is definitely how that plays out over the next couple of months, but it's not necessarily an environment at this stage where we are entering a full-on bear market and we will see massive corrections in the indices.
So we often talk about the importance of business confidence, and that tends to be quite a negative narrative. Just tell us what your thoughts were around Microsoft announcing that it's going to be spending an additional 5.4 billion rand on AI in South Africa.
It's It's definitely a very welcome surprise. It's much needed in terms of confidence in South Africa. It's definitely a feather in our cap when it comes to our drive to become one of the destinations for global players to actually invest in terms of data centers, AI capability. This investment really focuses on developing AI infrastructure and digital skills in South Africa. And it really positions South Africa as a great competitor and a great destination when it comes to AI. Whether 25.8 billion investment would be significant enough to really propel South Africa as an AI destination of choice is most likely debatable. But if anything, it will open the door for other international players to come into South Africa and potentially invest.
Yeah, no, that would be good news indeed. Bianca, more things to ask you, but not enough time. Thank you so much for your time. That was Bianca Botes. She's Global Director at Citadel.